the 7 reasons to invest in an index fund. That's what I want to talk about in this particular video. Index funds are a very interesting investment product. I like index funds because they are simple. So in this video, I thought I must talk about the 7 benefits or the reasons why you should be investing in index funds. Number 1, it is low cost. See, an index fund is not something which is managed by a fund manager. So it's like a system that is being set to track a particular index. So it's like a machine. So since it is completely automated, it is low cost. And the lower the cost, the better are the returns. So that is one reason I like index funds. The fund management expense is very low. So it's low cost. So my after cost or after expense return is high. Number 2, it is easy to understand. There is nothing complicated about investing in an index fund. So for example, if there is an index fund that is tracking the Nifty, which is the top 50 companies in India, then basically the fund is investing in the top 50 companies in India in the same proportion that it is available in the index. It is as simple as that. So it's easy to understand. I always remain invested in the top 50 companies in India. So if one of the companies falls off the index, some other company replaces it, but essentially I remain in the top 50 companies. So it's easy to understand. Number 3, it is relatively low risk. The reason why I say relatively low risk is because yes, it is risky if you are investing in an equity index fund. Of course, the markets keep going up and down. Even the index can go down 50% sometimes in a year or two. So it is risky, but it is relatively low risk. One reason I just explained to you, for example, I invest in an index fund, one of the company, it gets removed from the index, but then there is other better company that comes into the index. So that way my risk in the fund goes down. Okay, so relatively low risk fund. Number 4 is zero human error. See, as I said earlier, index fund is something which is not managed by a fund manager. So if I am a fund manager and I'm managing a fund, I am taking a view on the future. And my view on the future can be wrong. It can be right as well, but chances are it can be wrong. Those chances are not there in an index fund because it is not managed by a fund manager. It is simply tracking an index. So there is zero human error. So one fund manager might have a better view of the future. Another fund manager might have another view of the future. So one of them may be right, one of them may be wrong. So who knows what is going to happen in the future? In an index fund, I at least know that I am taking a bet on the top 50 or 30 companies through that particular index. So I am not worried about what people feel about the future. I am just investing in what is right now. Number 5, it saves time. Now this is very important. See, if I am an investor and I want to invest in a particular company, I will have to study its balance sheet. I will have to study the management of the company. I will have to study the industry, the competition, the products, the business, the services. I will have to look at a lot of variables to come to a reasonable conclusion that this company is worth investing at that particular price. And this research takes a lot of time. Whereas in an index fund, I don't have to do all of this research. I just take a bet on a particular market in a particular country and that's it. I simply invest in a Sensex or a Nifty and I'm done. I don't have to do much thinking from there on. It's a passively managed fund. I don't even need to monitor it as long as it is a certain percentage of my portfolio. So it saves a lot of time for me. I can carry on with my business or whatever profession I am in and let the index fund take care of my investments. So it saves a lot of time. Number 6, it is good for non-finance people. See, I am a finance guy So I can read balance sheets and profit and loss accounts and cash flow statements. Think about someone who has never studied finance, no formal education in finance, somebody who is an arts graduate. What does he know about balance sheets? So index funds simplify this thing. It makes it easy for even the layman to invest in equities. It provides you reasonable diversification as well. Plus it is low cost, zero human error. I mean, what else can we expect from a particular fund? It is far low risk than directly investing in equities without having proper formal finance background. Number 7, it is better than actively managed funds. See, in the US, they have done a lot of research, and in that research, they found out that over the long period of time, it is index funds that outperform the actively managed funds, because as we discussed earlier, in actively managed funds, there is this human error involved, or there is this human bias involved, which is not there in index funds. So it's very difficult. As markets mature, it is very difficult to beat the indices. So over the long period of time, when I say long period, I'm talking 10 years, 15 years, 20 years, 30 years. Over long periods of time, it is index funds that have given better returns. So these were the 7 reasons to invest in an index fund. Let me summarize them. First one is low cost. Second is it is easy to understand. Third is it is relatively low risk. Number 4, zero human error. Number 5, it is saving time for me. Number 6, it is good for non-finance people. And number 7, it is better than actively managed funds. So these are the 7 reasons which I wanted to discuss with you in this video. Thank you so much.